Peter D. Schiff, Crash Proof 2.0, How to Profit from the Economic Collapse. Embark on a journey through the impending economic collapse with a Crash Proof 2.0, How to Profit from the Economic Collapse by Peter D. Schiff. This summary outlines the various factors leading to the downturn, such as the refusal of American consumers to save, the Federal Reserve inflating one bubble after another, and politicians continuing to spend. You will also learn about the many myths surrounding the U.S. economy, which include the claims that trade deficits are healthy and consumer confidence is the key to the American economy. Ultimately, you will be guided on how to protect and benefit from the economic apocalypse by investing in foreign stocks and gold.
The American Economy, Myths and Realities. The American economy is facing an impending disaster with a decline in the value of the dollar and massive trade and budget deficits. Despite this grim situation, politicians and mainstream analysts continue to perpetuate myths that mislead consumers. These myths include the belief that trade deficits are a sign of a robust economy, inflation is low, and productivity is soaring. The truth is that the U.S. service economy is a sham, and most of the service jobs available are low-wage and low-skill. Amid this economic crisis, individual investors can make mistakes, such as keeping their savings in dollars, buying mutual funds, consuming instead of saving, and confusing a stock's price with its actual value. With a lack of concerted action, the average American standard of living will likely suffer. To protect themselves, consumers need to prepare for a rainy day, save for the future, and invest wisely. The American economy is in dire straits, but politicians and analysts don't seem to be overly concerned. However, in the near future, the U.S. will no longer be the world's leading economic power. The country measures its trade and budget deficits in the hundreds of billions and its national debt in trillions. The dollar is slowly losing value, and the Federal Reserve keeps inflating one financial bubble after another. To make matters worse, individual consumers are reluctant to save, which only exacerbates the problem. In this book, the author debunks several myths propagated by politicians and mainstream analysts. For instance, they maintain that trade deficits are nothing more than a sign of a robust economy, and that the low-wage service economy has replaced the manufacturing industry. However, these notions fail to recognize the serious implications of these developments. With a huge trade deficit, the U.S. economy is on the path to ruin, as Warren Buffett warned in 2006. Moreover, the information economy is a sham, with most of the much-touted service jobs being low-wage, low-skill positions. The author argues that consumers need to prepare for a rainy day and avoid being overconfident about the future. Confidence, rather than being essential to the economy, leads to irresponsible behavior such as running up credit cards and spending recklessly. Consumers must learn to live below their means, save for the future, and invest wisely. If they fail to protect themselves, an impending monetary crisis will dramatically reduce their standard of living. Individual investors also tend to make several mistakes that contribute to the financial instability of the economy. For example, they keep their savings in dollars, assuming that the U.S. economy is fine, and they buy mutual funds based on short-term performance, leading to speculation and wasteful behavior. Consumers need to start distinguishing a stock's price from its actual value and avoid being swayed by false promises of high dividends. The American economy is on the brink of disaster, and it is imperative that consumers take action to protect themselves. Policymakers, investors, and consumers alike must recognize the reality of the situation and prepare for an impending monetary collapse. The time to invest wisely, save for the future, and live below one's means is now. The future of the U.S. economy depends on it. Investing abroad for safer havens. Investors in the U.S. should consider putting their money towards foreign stocks as a way to diversify their portfolios, protect their investments, and generate higher yields. With the many risks facing the U.S. economy, investors can capitalize on opportunities overseas, particularly in China, which has rapidly grown to lead the global economy. But beyond China, investors can also look to Canada, Australia, New Zealand, South Africa, Norway, Hong Kong, Singapore, Japan, South Korea, Thailand, and the Philippines. Investing abroad is not without its risks, however, and investors must be wary of political upheaval and currency risk, as well as employing sound strategies, such as focusing on small companies, buying a portfolio of fewer, safer companies, keeping cash available in domestic currency, and avoiding costly traditional methods, such as international mutual funds and American depository receipts, ADRs. Investing in gold. Gold is currently experiencing a bull run, with its value increasing significantly since 2000. This upward trend is predicted to continue due to factors such as the potential return to the gold standard and increased demand from central banks. Investors are advised to allocate a portion of their portfolios to gold, with options including buying bullion, investing in gold ETFs, and purchasing mining stocks. Silver is also set to rise but carries more risk. Investing in gold is a prudent choice in uncertain times. Safeguarding your cash. Protect your cash by investing in stable currencies for long-term holdings. American citizens should limit their dollar savings to 6 months of living expenses due to the currency's long decline. Consider purchasing certificates of deposit in foreign currencies, opening a foreign bank account, or investing in the Merck Hard Currency Fund, which owns a basket of hard currencies from countries with sounder monetary policies. Another option is government bonds issued by stable nations such as Germany, Australia, and Canada. Don't let your cash lose its purchasing power, safeguard it and watch it grow with smart investments.
The summary of A Crash Proof 2.0 is an enlightening experience that aims to help its readers prepare for the economic challenges ahead. It uncovers a multitude of misconceptions surrounding trade, inflation, productivity, and consumer confidence, and reveals the possible mistakes investors might make. The resilience of foreign markets like China and European countries creates a strong case for exploring investment opportunities outside the US. The value of gold in the future market also shows potential for a profitable investment. Equip yourself with the necessary knowledge to withstand the economic tide by smartly investing in foreign stocks and gold, ultimately safeguarding your assets for the eventual economic calamity.